Good afternoon to everyone. Learning gives creativity. Creativity leads to thinking. Thinking provides knowledge. Knowledge makes you great. With this beautiful quote by Dr. APJ Abdul Kalam, I graciously welcome you all to this 5 days national level FDP program on building and sustainable competence, corporate management, law and practice, which is conducted on behalf of Congo Arts and Science College Autonomous Erode and organized by the departments of Corporate Secretaryship with CA, Commerce, Commerce with CA, Professional Accounting, and Banking and Insurance, in association with the Institute of Company Secretaries of India, Coimbatore chapter. Together with the tendencies of earlier centuries, corporations operating in the 21st century need to face new, ever more significant challenges. One of the most striking challenges is sustainable development, as it has become a central issue for today's corporations, and it also has an outstanding impact on the majority of the corporations' operations. This program will learning on the sustainability among the teaching fraternity. We shall begin this program with prayer for showering the glory of Almighty.
கருவாக்கி உருவாக்கி எனையாண்டு காத்தருளும் இறைவா நன்றி. எங்கும் நிறைந்தோனே எல்லை இலாதானே, எங்கேயும் எப்போதும் என் குலம் காப்பவனே. நெஞ்சம் துணிய துணையாய் வருவாய், நேர்மறை உணர்வுகள் பெருகிடச் செய்வாய். உடலில் உறுதியை பெரிதாய் தருவாய், உனை உணரும் அறிவை என்னுள்ளருள்வாய். சுற்றமனைத்தும் காப்பவனே, செய்தொழிலின் ஏற்றம் தருபவனே, எடுத்த செயலில் வெற்றி கொடு, என் ஆற்றல் பெருகிட அருளை கொடு.
To welcome us, to do the honor, to welcome us, to establish integrity, I request Dr. KKA Arugappan, Associate Professor and Head, Department of Corporate Secretaryship with CA and Professional Accounting, to deliver the welcome address.
Good afternoon to one and all. It's my pleasure to welcome you all to this 5 days faculty development program entitled Building and Sustaining Competence, Corporate Management, Law and Practice, organized by Punga Arts and Science College Autonomous Erode in association with the Institute of Company Secretaries of India, Coimbatore branch, from today onwards. That is from 2/8/2021 to 6/8/2021. We, the Department of Corporate Secretaryship with CA, Commerce, Commerce with CA, Professional Accounting, and Banking Insurance, are glad to welcome our correspondent, Thiru K. Palanichami sir, who always supports us in all our activities. Welcome you, sir. We are pleasurable in welcoming our beloved principal, Dr. N. Raman sir, who channelize and guide us in all our endeavors. Welcome you, sir. On behalf of the Congo Arts and Science College, I am delighted to welcome the chairman of the Institute of Company Secretaries of India chapter, Coimbatore chapter, and managing committee member CS K. Duraisamy sir, who has consented to bestow keynote address. Welcome you, sir. I am enchanted to welcome the Vice Chairman of the Institute of Company Secretaries of India, Coimbatore Chapter, and Managing Committee Member CS S. Palani Kumar sir, who has assented to confer special address. Welcome you, sir. I am elated to welcome Auditor C. Sagundala Madam, who has concurred to be the guest speaker of today's session. Welcome you, Madam. I am charmed to welcome the Assistant Director of ICSI, Coimbatore Chapter, Mr. P. Srijit, who has extended his support in connecting resource persons and organizing this FDP. Welcome you, sir. I also extend a warm welcome to the Senior Office Assistant of ICSI Coimbatore Chapter, Mr. Ashok, who has extended his service. Welcome you, sir. More than 250 faculty members from 171 colleges have registered and connected with us now through social media. We, the Congo Arts and Science College and the Institute of Company Secretaries of India, Coimbatore branch, welcome all the assistant professors, associate professors, professors, head of various departments from various colleges. Welcome you all. I am cheerful in welcoming the Head of Commerce, Dr. K. M. Kumaraguru, Head of Commerce CA, Dr. H. Vasudevan, and all other faculty members of various branches of commerce and other department heads and faculty members of our college. Welcome you all. With this, once again, I welcome you all and conclude my welcome address. Thank you.
Thank you, sir. Now, I request CS K. Duraisamy, Chairman, ICSI Coimbatore Chapter, to convey the keynote address.
Thank you. Respected correspondent Mr. K. Palanichami, learned principal Dr. N. Raman, learned professor Dr. KKA Alagappan, Head Corporate Secretaryship Department, learned professor Dr. K. M. Kumaraguru, Head of the Department of Commerce, learned professor Dr. H. M. Vasudevan, Head of the Department of Commerce CA, learned professors, faculty members, and faculty members of other institutions, and also the faculty members of Congo Arts and Science College, Erode, Mr. Palani Kumar, Vice Chairman of ICSI, Mrs. Sagundala Palani Kumar, Speaker of the Day, Mr. Srijit, Assistant Director, and Mr. Ashok, ICSI, Officer ICSI, Coimbatore. A very good afternoon to all of you. Indeed, I have immense pleasure in addressing a gathering of highly qualified and well-educated and experienced intellectuals. On knowing the qualification and experience of the audience before me, I am afraid, and the question in my mind is, could I meet your expectations and do justice for the time you are going to spend with me? I will try my level best. First of all, I wish to place on record my appreciation to the correspondent, to the principal, and the team of Congo Arts and Science College for organizing this knowledge sharing program, knowledge sharing platform entitled as Building and Sustaining Competence for Corporate Management Law and Practice, to be held over a period of 5 consecutive days. Friends, today's theme has 2 segments. The first is building and sustaining competence. The second segment is corporate management law and practice. First, I wish to address the second segment, corporate management law and practice, and take up the first segment later on. Managing corporate today is not an easy job. Having experienced in 2 big corporates in my career over a period of 34 years, 12 years in Naval Electric Corporation, and then 22 years in Lakshmi Machine Works Limited, Coimbatore, I have faced and I have come across a number of challenging corporate management issues. Nowadays, doing business is not an easy job. The complexity of business is increasing day by day. Every day we are coming across new laws, acts, rules, regulations, and amendments and modifications thereof. The company law, SEBI regulations, tax laws, labor laws has stringent provisions, and it is very difficult to comply with those provisions. So taking business decisions without violating these business laws is a very big task before the corporate managers. And this taking decision under this background require a in-depth expert knowledge and research attitude. This is the reason why the government has started the movement called ease of doing business. Why this concept of ease of doing business comes? As there are difficulties in doing business, the government, central government itself felt and realized the difficulties in doing business, and it came forward to alleviate the difficulties in doing business by trying to simplify the laws, rules and regulations, and decriminalize certain penal provisions. Thus, the second segment of today's theme, that is corporate management law and practice, is a complicated one and require continuous updation of knowledge, particularly the corporate laws. Keeping this end in view, you have organized this 5 days faculty development program. Friends, now I am coming to the first segment of the theme, building and sustaining competencies. First one has to build the required competence, then take efforts to sustain the same to meet the emerging challenges. Okay, how to build competences? One can build competences by education, research and training. Academic education, research expertise coupled with professional qualification will enable you to build the competences, and continuous updation of knowledge will enable to sustain the competences and thereby meet the challenges of corporate management, law and practice. This is the theme of the day. My dear professors, you have excellent academic qualification, very good research background and teaching experience. If you combine this with a corporate professional qualification, you can excellently meet the emerging corporate challenges. One such corporate professional qualification is the company secretaryship course or the company secretaryship profession. This professional course is offered by the Institute of Company Secretaries of India. Our Vice Chairman, Mr. Palani Kumar, is going to speak next. We'll give you more details about the institute as well as the CS course. To be in a nutshell, the CS is a part-time or correspondence course. You can study while you are in employment. This is the cheapest available corporate professional course. The total cost of the course, all inclusive, will not exceed 50,000 rupees for the entire course. This is lesser than the fees payable for kindergarten classes. And no company secretary is remaining unemployed as on date. This is an important attraction of this CS course. Another important attraction is, and this profession has no retirement. You can take myself as an example. Even after retirement at the age of 60 from the service of the Lakshmi Mess Limited on 31st March 2017, I have taken up practice. Today I am in practice as a company secretary and I could practice till my last breath. That is the reason why I have brought my son also to this profession. He is also a qualified company secretary and is in practice with me. My dear professors, I take this opportunity to advise you to join the CS course, become member of the Institute of Company Secretaries of India, and immediately on retirement, you can take up the practice as company secretary. You need not sit idle after retirement. You can very well combine your academic experience, research knowledge with the CS professional qualification and provide excellent solution to the corporate problems. You can act as corporate consultants post-retirement. This is a very easy course and company law is not a rocket science or physical science or medical science difficult to understand. Company law is a procedural law and not substantive law. And unlike constitutional law and criminal law, this does not involve much interpretations. So this is only a procedural law and containing a set of procedures for incorporation and management of the companies. My dear professors, I also request to advise your students also to pursue CS course parallelly along with their graduation course. So this, since this is an part-time course, then you can easily combine this professional course along with the graduation course and do parallelly. And they can, once they become company secretaries, they will be well placed in their life. Dear professors, I extend my heartfelt thanks to every one of you who are associated with this, with organizing this program and giving an opportunity to address the highly qualified intellectuals. I hope I have not wasted your time. I thank every one of you. Thank you very much. Thank you, one and all.
Thank you, sir. Now I request CS S. Palanikumar, Vice Chairman, ICSI Coimbatore Chapter, to convey this special address. Please, sir.
Thank you. Thank you. Very good afternoon to one and all. Respected Dhruv K. Palanikumar sir, correspondent. Respected our chairman, Duraiswamy sir. Then respected Dr. N. Roman, principal of our Kongu Arts and Science College, Erode. And respected executive, Mr. Dr. K. Alakappan, and executive, our institute executive director, Sijit sir, and officer Ashok sir, and all faculties, one and all, very, very warm good afternoon to one and all. Dear faculties, so this is a very good opportunity program. It is organized by your college and it is a very immense pleasure to introduce through our institute. So it is a great opportunity for all. So this is a 5-day faculty development program. So building and sustaining competence topic, corporate management law and practice. So it is a 5-day program. Our eminent speaker, so it's a 5-day program. Each and every day there have a separate speaker for the separate topic. So today SSCAC Sakundala become a chartered accountant. His topic is income tax planning and e-filing of income tax returns. Then second day is the implementation of Indian accounting standards by our AK chartered accountant AK Badri Narayanan FCA. Then third day is the another important topic. You have selected the topic is well and good. Oh, each and every topic is more vital, useful, and for our all faculties. Role of SEBI in corporate governance. This is by our Dr. Madhusudanan sir. Then another is a recent amendment in Companies Act. This is by our SP Iswaramurthy. This is the next day. The last day session. Then it is a topic is overseas investment under FEMA. So these are all the vital topic for all the faculties and lecturers. So dear, this is the institute. ICICI is the institute. Why we are coordinate with our commerce department with our ICICI. This is the more tie-up unit. So both the session, both the commerce and it be always associated with the ICICI. ICSI, first I will tell, the ICSI is the professional body. It is running under the control of the central government. So you have to be think of your mind. There is a central government body. That central government body giving the profession to the entire nation. Our ICSA vision statement, just I will read out the vision statement, very, very noble vision statement, to be a global leader in promoting corporate governance, to be a global leader promoting corporate governance. See that the word is very, very important. Promote the corporate, good corporate governance is a very, very important for the each and every organization, every companies, even every proprietorship or partnership, whatever it may be. Corporate governance, it is a very, very, very important topic. So you don't say a company is a corporate one, it then be a global leader. So automatic. Then mission statement. There is a first one is a vision statement. Next one is a mission statement. Mission statement to develop the high caliber professionals, high caliber professionals facilitating good corporate governance. So we are for the ICC Institute is promoting the high caliber professionals. That is also very, very important to know the corporate law, to overcome the loopholes or everything. Professionals can do it everything. Then then also another ICC. This is a vision statement and mission statement. Then it is a next one is the motto of ICICI. ICICI motto, Satyam Vada Dharma Chara. See that word. What is the meaning of Satyam Vada Dharma Chara? That speak truth, abide by the law. So this is a very, very noble motto, noble vision, noble mission. So this is the our ICSA institutes having the vision and mission. So dear faculties, our profession is having the three stages. It may be a three stages. It is a very easy. Foundation is a one stage. Then second stage, the executive level. Foundation, say from the +2 level, you can complete then the executive level. Then it is a professional level. So if you three stages of the executive level, two models is a first model, second model. In the professional level, it is also first model, second model. So to overcome this, all these, then you will become a professional. So you see that here more than 12.13, 15 lakh students are enrolled as a student, but that qualified only the now the registration hours 60 plus only 60,000 plus only. Now it is a professional, they are qualified. So what is the reason backlog behind this? The student wants to choose the courses, they have to be in-depth study in each and every moment. They have to study well, they have to each and every moment we have to study, then only the course should be a all professional course is not an easy thing. It's a CA, CMA or CS. Our CS is the more oriented on core subject with the Companies Act. So if you are the faculty member, I taken the many classes for the faculty members. The faculty is what they are saying, what they are thinking themselves. So once you are I'm employed, I can work as a faculty, then the research scholar. They're not like this. You can focus on the subject of that ICSA. That leads to more encouraging. You can allotted 1 or 2 hours time for this profession, then you will become a really a professional. Then after completion of professional, then you are having the now you are the existing as a faculty, okay, no problem. Now you can go for the after qualified, you can be a employment or you can be a practicing as a company secretary. So practicing see that my example for me, I'm for the very beginning, I have BA only tax consultant. I concentrated with the direct tax, indirect tax. Then that this area simultaneously, I have concentrated this profession. In my age of 45 only, I have qualified as a company secretary. So up to that we have filing the incorporation, all work we are doing. Once qualified, that level is totally changed. So you can be the qualified company secretary. Your area is, there is a vast area, secretarial audit also, it is a wide scope for the all practicing company secretaries. Then there is a, you can be the compliance officer in SEBI. Then you can be the insolvency professional. This is a new area introduced by the IBBA, Insolvency Bankruptcy Board of India. They introduced that 2016, this act is enacted. So this act is enacted for the registered valuer as well as insolvency professional. So once you qualified as a company secretary, you can become the insolvency professional or you can be the registered valuer. This is a new opportunity area in the practicing company secretary. Even in the employment, all complaints officer, even it is up to 10 crores, above 10 crores, compulsorily company secretary has to be appointed in any one of the company. My suggestion, it is not like this. A company once incorporated by near 1 lakh paid up capital, it need the total guidance from the company secretary. Now the process procedure is totally changed. So each and everything that cost accountant or chartered accountant, they won't interfere this area. This Companies Act is totally 2013 Act. There is a tremendous changes and a tremendous scope for the company secretaries. So here, faculties, you try to focus this on this subject. So in this case, you can be the number one in the practice. So I know many things. One retired bank manager, they started his career after age of 55, 56, 58. Now he is a practicing as a company secretary. Now he is having the various branches throughout India. So this hope is totally different. There will be some lightning in our mind, then you will become the easy number one company secretary. So that is a vast area, vast scope is there. So once you begin the area, there is a lot of you can go and be there. GST consultant. GST consultant also you can scope, you can filing the return, then you can give the you can file appear the hearing for the many cases. Any GST very wide of no there is a lot of shortage for the professionals. Then you can be the income tax professional, income tax consultant, income tax representation, then appeal hearing. Then this is the various area you can. Another important, the companies, the ICSA, that is CS topic, CS subject, CS professional can be the know the entire law. Compared to other act, it is a CA or CMA. They are not studied the entire law. That's called ESI, PF. That is all a lot of every law. That's called everything. You can be known well through the our profession. So you can the avenue area is very vast. You can be the number one in the practice. So so all my request to all our faculties, try to make the things and do it best for this our profession. In our you can guide with the students also. You can arrange one session for your students also. You can focus of the students to those are all our corporate students are there, BA corporate and BCom corporate is there. So you can focus them, you can insist them, then along them you can study the subject. So you'll be a become a company secretary. So this is the wide area, wide scope for the each and every one. So and the another important thing, you can be the any vast area, whatever the area you can focus. You can be any particular area also you can focus in maybe a income tax focus, income tax area also you can focus well. So this is my kind request. Now the today topic is the madam is taking, I think madam is my spouse, so she will undertake the income tax. It is at income tax planning and how to file. So income tax planning also it is a must for the each and every professional, and it is a taxpayer. So how to plan the our tax? So many client has come over here with the only 80C deduction. Their limit is 1.5 lakh. They have paid the 2 lakh, 3 lakhs as a housing loan, all things. So we have giving advice to them to try to plan accordingly. Lot of deductions from 80, lot of deductions heading is there. You can split up by that one. You try to utilize the deduction as much as possible, then you'll be the lesser payer taxer. So lesser payer of taxer is a very important. We have to guide them well for the taxpayer. So that's are all the it is a vital today topic. I request to the speaker to proceed further. Thank you for the great opportunity.
Thank you, sir. Now, I request Dr. K.M. Kumaraguru, Associate Professor and Head, Department of Commerce, to introduce the chief guest.
Continuous learning is the minimum requirement for success in any field. Hope this 5-day FPP program will provide knowledge to the participants on various areas. All the 5 speakers are eminent personalities in their field. For the 5 days, today, the first day program, the guest speaker will be the chartered accountant and the chartered secretary, C. Sakuntala. He is practicing in Coimbatore and faculty member of ICSI, Coimbatore chapter. He is going to elaborate on the topic income tax planning and filing of tax returns. On the second day, Tuesday, chartered accountant Patri Narayanan and company secretary in practice Coimbatore on the topic implementation of Indian accounting standards. Day 3, Wednesday, Dr. C.V. Madhusudanan, company secretary, and he has the qualification of BL, partner KSR and company secretary and co-company secretaries, and LLP insolvency professional, having offices at Chennai, Bangalore, and Coimbatore. He speaks on role of SEBI in corporate governance. On the Director, Ashwika Corporate Consultancy Services, Coimbatore, and he is an insolvency professional, past chairman of ICSI Coimbatore chapter. He delivered talk on recent amendment in Companies Act. The last day, Friday, Company Secretary G. Balasubramaniam, Roots Multi-Clean Limited, Coimbatore, and past chairman ICSI Coimbatore chapter, is going to speak on overseas investment under FEMA. Hence, all the participants are expected to attend all the 5 sessions and get benefited. Today's session will commence immediately after the inaugural session is over by Chartered Accountant Sakuntala Madam. Thank you.
Thank you, sir. Dear participants, the technical session is going to start after the vote of thanks. You may post your queries and questions at the chat box. During the question answer session, the feedback link will be posted in the chat box and it will be clarified after the end of the technical session. Thank you. Now, I request Dr. H. Vasudevan, Assistant Professor and Head, Department of Commerce CA, to propose the vote of thanks.
Okay, it's time to express our gratitude. On behalf of Congo Arts and Science College Commerce team, we express our sincere thanks to Company Secretary K. Duresamy sir, Chairman, Institute of Company Secretaries of India, Coimbatore Chapter, for associating with us for this faculty enrichment activity. And thank you so much for your effective keynote address. Thank you, sir. We would like to thank Company Secretary S. Palani Kumar sir, Vice Chairman, Institute of Company Secretaries of India, Coimbatore Chapter, for his informative special address and his contributions to the faculty development program. Thank you, sir. We thank our resource person, Chartered Accountant Sakuntala ma'am, Chartered Accountant Badrinarayan sir, Dr. Madhusudanan sir, Company Secretary P. Surmurthy sir, Company Secretary Balasubramaniam sir, and the entire ICSI team of Coimbatore for their acceptance and support to share knowledge. Thank you, sir. I take this opportunity to thank our correspondent and principal for their support and cooperation for this program. A big thanks to the participants for being here in the virtual FTP. In a short notice, it is an overwhelming response. Thank you so much for the responses. Thank you, sir. Over to Rajalakshmi for technical session. Rajalakshmi.
Yes, sir. Thank you, sir. Now, day one's technical session begins. Before that, I would like to express my immense pleasure to introduce today's speaker, CA C. Shakuntala, BCom FCA ACS ISA, Prop of Shakuntala and Associates. She is a practicing chartered accountant and fellow member of the Institute of Chartered Accountants of India and associate member of the Institute of Company Secretaries of India. She is a qualified registered valuer for financial assets and securities if Insolvency Bankruptcy Code of India. She has graduated from PSGR Krishnamal College for Women, Coimbatore in the year 1991 and schooling from Mani High Secondary School. From 1991 to 2001, for a period of 11 years, she has served as Quality Control Officer in Surya Prabha Mills Private Limited, Kunyamuttur, Coimbatore. In 2006, at the age of 36 years, she joined CA course and in 2008, CS course. Thereafter, she is practicing in the area of direct taxes, indirect taxes, corporate law, ROC related activities, and concurrent audit of scheduled banks. She's handling classes in indirect tax, direct tax, and corporate accountancy and auditing subjects for executive programs at ICSI Coimbatore chapter. She has addressed the workshop on direct tax, indirect tax, Companies Act 2013, and accounting standards at various colleges at Coimbatore. She is a member in Board of Studies of Department of Ramakrishna Mission Vidyalaya and PSGR Krishnamal College for Women, Coimbatore. She has qualified in Certified Course for Women Director of Institute of Company Secretaries of India and also qualified in Independent Director Course of Indian Institute of Corporate Affairs. Now, I request the madam to engage the technical session on the topic of income tax planning and e-filing of tax return. Over to you, ma'am.
Yeah. Thank you very much, ma'am, for your wonderful introduction today. Respected Thiru K. Palaniswamy sir, correspondent, Pungo Arts and Science College. Respected K.K. Alagappan sir, associate professor and corporate secretaryship, Pungo Arts and Science College. Learned Dr. K.M. Kumbaraguru sir, associate professor, Department of Commerce. Learned Dr. N. Raman, Principal, Congo Arts and Science College. Respected Chairman CSK Doraisamy sir, Chairman ICSI Coimbatore Chapter. CSS Palanikumar sir, Vice Chairman ICSI Coimbatore Chapter. And Executive Director Mr. Srijit sir, ICSI Coimbatore Chapter. Senior Officer Mr. Ashok sir, ICSI Coimbatore Chapter. And all the faculties who have been enrolled for the 5 days faculty development program. Warm wishes to one and all. I'm in pleasure to address you all in this 5-day faculty program on building and sustaining competence, corporate management, law and practice. And it is being very happy to address the learned gathering today. I bow myself in front of all professors and faculties who mold every student to a magnificent citizen with a good human values and with marvelous knowledge. Right? Today, what I am is because of Almighty and parents and family members and all the professors who have been a pillar behind me in implementing their knowledge to me. Fine. So with the tributes to all the faculties, I shall begin my session today. So it is really a need of the hour of the faculty development program on the good subject in income tax, SEBI regulations and FEMA and Amendments in Companies Act. All the faculties have been a very eminent speaker who are going to address you all in the next 5 days. In fact, CA Badrinarayanan sir, I am his student 15 years back, so I'm in pleasure and honored to share the platform along him. I think this will be one of the tribute to him that his student has been sharing a platform in addressing you all in the faculty development program. Thank you very much, and warm wishes to one and all, and I wish you all the best to enrich your knowledge in days to come for the 5 days faculty development program. With that, I will go for the today's technical session of income tax planning and e-filing of income tax returns. Just a few minutes, I'll share my screen. Yeah. Are you all able to see my screen? Yes?
Yes, madam. Yes, madam.
Fine. Now, today's topic being income tax planning and e-filing of tax returns. So this tax planning is very much essential in income tax, right from salaried people to the MNC companies as such, because without a tax planning, no one can have a computation of income and the payment of tax. So we'll see the importance of tax planning from a layman's side, from government side, how it is very important in the calculations of income tax and income tax law. And new regime versus old regime, this is an important topic to be discussed in today's scenario, wherein from this assessment year, new regime has been enacted in the Income Tax Act, wherein we have been an option to go for new regime or old regime. So we'll have a discussion what is new regime and what is old regime. And going forward for ITR filing, and on the topic of ITR filing, so far only one form, ITR 1 Sahaj form is being introduced, that too 3 days back, and still it is being under process, and there are so many validations error is being popped up, and the government is looking for the solving of all these errors. But still I'll try my best to log in into the website and to show how the form is and how you have to fill up all the particulars over that. Fine. So with this, we'll enter into our technical session. And before first, my tribute to all the faculties, Guru Brahma, Guru Vishnu, Guru Devo, Maheshwara, Guru Saksha, Parabrahma, Tasmai Shri Guruve Namaha. With a tribute to all the faculties who have been addressing today, and to the faculties who have made me to stand before you, we'll go for in towards the session. So first, what is the tax planning as such? Why it is being needed today? Not even today, even for every year, when you have a computation of income tax and computation of gross total income and computation of net income, tax planning plays a predominant role. Why? Because is every budget you have and updates in the tax rates, and you have updates in the exemptions and the deductions as such. Now, what is an exemption and what is a deduction? Exemption is a thing where you have within the heads of the income, where we have 5 heads under the income tax: income from salary, income from house property, income from business and profession, income from capital gain, and income from other sources. Exemption is that part which is being put within the section as such. Now, deduction is that part of deduction which comes under the chapter 6A, wherein after arriving the gross total income, the deduction is being claimed. So every person should know what is an exemption under each head and what are all the deductions to be claimed in order to have a best tax planning to be taken upon. Now, why this is being regarded as more important is, in every law of our country, the ignorance of law is not excused. So each one of us has to know what is the law is saying and what is the tax planning has to be taken up. If you don't have a good tax planning, we'll be ended up in a tax evasion, which is in return, we have to pay more penalty, interest, and even more worse to be an imprisonment as such, right? So tax planning is the best way of having a very good computation and to have a minimal tax to be paid to the government, right? So the first thing, the tax planning for retirement plans. So with the help of a tax planning, we'll be able to have a good retirement plans for being beneficial for us and for the beneficial for saving the tax and for the beneficial to the government as such who have been taking up the retirement plans. So I think you all will be knowing what are all the retirement plans. We have Provident Fund, we have National Pension Scheme. So many schemes have been there under retirement plans. Then calculation of gross total income. So tax planning is very much essential for the calculation of gross total income, wherein the gross total income is being arrived by adding up all the incomes under the each head, and the each head income is being arrived by imbibing the exemption, by availing the exemption under the each head. So calculation of gross total income is very much important in the tax planning. Tax saving deductions. So as I said, as chapter 6A, we have tax deductions. So tax saving deductions can be availed with the help of a tax planning. Allowances available. See, we have so many allowances and exemptions. In particular, section 10 speaks about all the allowances and the exemptions under the each head of the income tax. So allowances can be availed and exemptions can be availed, and finally net taxable income can be arrived. So these are all the main reason why the tax planning is very much important. Going forward, it is more efficiency for having an very minimal tax to be paid. Fine. So it's nothing but to evade the tax. It is better to have a good tax planning and see that we pay a tax which is being more beneficial to us and more beneficial to the government as such. So it is an essential part in case of an investor's finance plan. So we individuals, we can have a very good investment plan when we have a knowledge in the tax planning as such. So there is a reduction of tax liability and maximization the ability to contribute to the retirement plans. So the tax planning plays a predominant role in the reduction of tax liability, maximization of take-home salary, and for the betterment of retirement life as such, and increase the saving habit. So with all these, we can conclude that tax planning is very much essential part to be known. So as I said, in Indian law, the ignorance of law is not an excuse. So everyone should know about the exemptions and the deductions as such. So from 80C to 80U, we have tax deductions available for the tax planning as such. And with the help of this, we can have a very good tax planning. We have exemptions under section 10, but today we'll concentrate on deductions and the old regime and the new regime. In new regime, what are all the deductions cannot be availed in the new regime, and thereafter we'll go for the income tax filing. So where to invest? We have been speaking upon tax planning, then where to invest? So 80C has been given a deduction up to a maximum of 1,50,000. So how this 1,50,000 can be utilized and where to invest this amount? So first is employees provident fund. These everyone will be having, those who have been employed at corporate level, at institution level, they'll be having this employee provident fund. Public provident fund, it is been applicable to all persons in employed and the self-employed people. Tuition fees of our children and repayment of principal for the housing loan taken from any financial institution. National savings certificate, this could be from the scheduled banks or from the post office. It is being said as NSE certificates. Equity linked savings schemes, life insurance premium. This is one of the best way of availing the deduction. fixed deposits, unit link insurance plan, senior citizen savings scheme. So put together in all these investment, we can save up to 1,50,000 under section 80C, right? Now going forward further, apart from 80C, we have 80E, repayment of interest amount of loan taken for study, that is for educational loan, and the conditions to be fulfilled for availing deduction under this 80E is the deductions can be claimed only for the interest part which is being paid. So the principal part cannot be claimed. It is unlike for the housing loan where we can claim principal part under 80C and the interest part under section 24B under the head income from house property. Now in case of an 80E, only the interest amount can be claimed. So when our children have been taken educational loan, they can avail an interest amount paid towards that particular loan, and only individuals can claim this deduction under this section. In this section, HUF or any partnership firms cannot avail, and loans can be taken by an individual for fulfilling the educational requirements for self, spouse, or children, right? So if we have been taking loan for ourselves, for our spouse, and for our children, the interest payment paid towards that loan deductions can be availed, and it has to be secured from and recognized financial institutions and charitable organizations only. Fine. So this is a main part, important point to be seen. Why? Because this, in case of housing loan, if you have been getting loan from even any financial institutions which are not being recognized, even that the principal can be availed. But in case of 80E, the educational loan has to be obtained only from the recognized financial institutions and charitable organization, and the loan borrowed from friends and relatives are not eligible, and the deduction of interest payment is to a maximum level, and it is beyond the 80C of 1,50,000, it can be taken up. And for a period of 8 years from the year when you've been paying the interest under 80E can be availed. Going forward for 80CCD investment, 50,000 rupees in addition to the amount of 1,50,000 under 80C can be availed if we invest in the National Pension Scheme. Right? So what are all the conditions to be availed? So this 80CCD is available to salary as well as self-employed individuals. So even employed and self-employed can take upon this National Pension Scheme, and the amount invested will be over and above of 1,50,000 under 80C. So the maximum limit under 80CCD is 2 lakhs, putting together with the amount which is being spent in 80C. So 80C and 80CCD put together, the amount should not go beyond 2 lakhs. So 1,50,000 from 80C, we can take a deduction, and additional of 50,000 can be taken by investing in National Pension Scheme under section 80CCD. So the money received from this NPS, fine. So after the lock-in period of 5 years, 10 years, or 15 years, when you've been receiving monthly payments, or in case when you're surrendering that NPS scheme, at that time when you get a lump sum, both the amount are liable to tax as per the provision, right? So at the time of investment, you've been getting a deduction under 80CCD, but for the monthly payments, what you have been receiving after the block-in period is being liable to tax, right? So any amount received from NPS, which is being reinvested in any annuity plan or any other exempted plan to be taken up, then it is being exempted from the taxation. Fine. So it had to be very careful to be noted to know that the amount which you have been receiving from NPS as a monthly payment, and when you surrender that, it is being taxable under the income tax law. Going forward for section D, this is also apart from 80C, and we under section D for the Mediclaim, we have deductions as such. wherein if you have been below 60 years, above 60 years, and we have a bifurcation of self and the parents, right? Suppose I am an income tax assessee. If I am below the age of 60 and my parents are also below the age of 60, we can avail the deduction of about 25,000 plus 25,000. If I am above less than 60 and my parents are above 60, and 25,000 for self and 50,000 for my parents, I can avail. If I am above 60 and my parents also above 60, then for self 50,000 and for parents 50,000, totally 1 lakh we can avail. So under section 80D, depending upon the age of self and the parents, the amount is being variated, and the total amount of maximum limit of 50,000, 75,000 and 1 lakh could be invested in section 80D for Mediclaim in order to have a good tax planning. Now this tax planning of section 80D is being available for NRI also under this section, right? So 1 minute, yeah. Yeah, able to see my screen now?
Yes, ma'am.
Yes, ma'am.
Yeah, fine. Now going forward, section 80DD. Now this is towards the disability of dependent spouse, parents, kids, and siblings, right? So here under section 80DD, an amount of 75,000 can be claimed for spending medical treatment if spouse, parents, kids, and siblings are being 40% disability is being faced by them, and 1,25,000 if the disability is being severe, right? So for availing this, we have to file form 10IA, and this we have to file online in our login user ID in www.incometax.gov.in. So before filing the income tax return, those who are availing deduction under section 80DD have to file 10IA. So without filing 10IA, if you file your salary return, you will get a pop-up message that you are claiming section 80DD, and hence file first 10IA, then file the salary return. So unless you file 10IA, your deductions will not come under that column 80DD. Going forward for 80DDB, this section says about the amount spent for the specified critical ailments for spouse and for our parents for an amount of 40,000, and in case of dependents also this can be claimed, and the tax deduction under this section for senior citizens is being revised to 1 lakh with the financial year of 2018 and 19. So to 80DDB, for 40,000 for less than 60 years and 1 lakh for above 80 years, that is for senior citizens as such, right? So in order to claim this, we have to obtain a doctor's certificate or a prescription from a specialist working in a government or a private hospital. So one of the key thing to be noted over here, I'll tell one example. For a cancer treatment and for any brain stroke treatment or for any severe treatments when the amount has been spent. So the maximum of 40,000 and 1 lakh could be availed under this section, and this doctor certificate and the prescription need not be uploaded. We have to have for your reference with you anytime any queries from the income tax, you can submit that documentation to be taken up. So in case of deductions, wherever you claim, the documentation has to be preserved for a period of 8 years, because for a period of 8 years, anytime the income tax department can open our return which has been filed. So this doctor certificate need not be uploaded. Now next is 24B under the head income from house property. So this is towards the loan what we have taken for the house what we have been living. So from financial year 2017-18, this tax benefit is being available under section 24B to an amount of rupees 2 lakhs for a provided individual is having a single house property as such. And if it is not been claimed, if we have paid interest more than 2 lakhs, this can be carried forward subsequently for a period of 8 years. And in case of multiple house we have been having, and we have multiple loans also for the respective houses, then also put together only 2 lakhs can be availed. An amendment has been come for this year, wherein we can have 2 houses as such, as a self-occupied house or as a rental house as such. So a standard deductions of 30% is being given under section 24A, and apart from that 24B, a deduction of 2 lakhs is being given. So from this current year, you can have one more additional house as a self-occupied house, and with that we can claim interest of 2 houses as such put together, fine. So if you have losses, then also the negative balance which is being arrived, it can be carried forward. And before arriving the negative balance, the loss of the house property can be set off against the income from salary or income from business and profession. So even after that, if you have any losses, it can be carried forward. So when the losses have to be carried forward, we should note that the returns have to be filed within the date under the section 139(1). Fine. So if you file returns beyond the due dates specified under section 139(1), the losses which could be carried forward cannot be availed in the next year. So those who are being having losses in house property under the head house property, see that your returns have been filed in time under section 139(1). So section 80EEA, what does it says? It is a tax which is being also towards an housing loan. It is beyond the 80C deduction for the principal of housing loan and the interest under 24B. So this is being given to an individual up to a 1.5 lakh from the financial year 2019 and 20, and this is being taken up for this current financial year also as well. The conditions to be satisfied over here is the housing loan to be sanctioned between the dates of 1st April 2019 to 31st March 2020. The stamp duty value of that property should not exceed 45 lakhs. The taxpayer should not own any other residential property on the date of loan sanction. So this tax benefit will be available from 1st April 2020 till the end of the loan which is being completed. Fine. So this is over and above the 80C and 24B for the eligible housing loan. So the total interest of deduction will come up to really 3.5 lakhs, 2 lakhs plus 1.5 lakhs. Fine. So this is a good deductions to be availed. So wherever, as I said, deductions to be availed, the documentation has to be preserved as well by the assessee as such. So going forward for this, even the interest paid on home loans from friends and relatives will be available under section 24B. But in case of 80EEA, the loan which has been availed from the approved banks and the financial institutions only can be availed. So this is not unlike the other housing loan where we can claim interest under 24B if we have been obtaining a loan from friends and relatives. Fine. So even for the pre-construction period, towards the interest charge, the total interest can be availed as a deductions in the 5 equal installments. So all these we should have a very good computation to be arrived in, and that computation has to be preserved, and you should have to approach a good chartered accountant to have a bifurcation of all these deductions what you have been going to avail under 80C, 80D, 80EEA in order to have the good tax planning as such. Fine. So in this 80EEA, both resident Indian and non-resident Indian also can claim deduction under this particular section. 80EEB, what does it say? It has been introduced by the Finance Act 2019. A tax deduction up to 1.5 lakhs can be claimed on the interest paid or loan taken for the purchase of electric vehicles. So this is a very good deduction which has been introduced. So the key point to be noted over here is this is available only to an assessee who has been an individual, and the loan should be sanctioned by the bank and specified non-banking financial institutions, and loan should be sanctioned during the period 1/4/2019 to 31/3/2023, and it is being only towards the purchase of electric vehicles. Fine. So the documentation is also very much important in case of section 80EEB, wherein the condition to be proved, that is to purchase of electrical vehicles in order to have an objective of Go Green project of the government as such. 80G, this we all know has been contribution to the charitable institution, donation to the relief fund, as we have in pandemic, donation to a PM care fund, donation to CM care fund, donation to the COVID relief fund. So all these funds, how deductions can be claimed under 80G, and the payment has to be made via check or draft. Cash, if you've been donating, you cannot avail deduction more than 2,000 rupees, because it is being restricted to 2,000 rupees if we paid donation in cash, right? So donation to a political party can be claimed under a separate section of 80GGC only to the charitable institutions or any relief fund. So Prime Minister Relief Fund, Chief Minister Relief Fund, or any flood relief fund, you have 100% deductions over there, provided you pay the donation through a check or a draft. If you pay the donation in cash, you have been restricted to only 2,000 rupees. You cannot claim beyond that, right? Going forward for 80GG, very important section to be noted for claiming deduction under tax planning, wherein you have 60,000 rupees per annum, and the conditions to be noted over here is it is being applicable to all those individuals who do not own a residential house and do not receive HRA, right? So for salaried people, all receive HRA and everything come into the Form 16 as such. Those who don't receive HRA, they can claim this section 80GG apart from Form 16, and they should have a documentation for that, claiming this. So the extent of deduction will be limited to the least of the following, that is the rent paid minus the 10% of adjusted total income. This adjusted total income will be the total income without claiming the Chapter 6A deduction, rupees 5,000 per month, and 25% of the total income. So the least of all these will be your claim for under 80GG, that is beyond the individuals who do not own a residential house and do not receive HRA. So the documentation is very important for whatever we are being claiming beyond Form 16 as such, because when you have a Form 16, you will be submitting for all the exemptions and the deductions to your institutions based upon which the Form 16 is being issued. So once the Form 16 is being issued, the central government is under the option that the Form 16 is being issued under the, after having a absolute computation of gross total income and the net total income, right? So 87A tax rebate, an important rebate which is being given, and this year this rebate is being up to 12,500, those who are having a taxable income of up to 5 lakhs. Fine. If your taxable income is beyond 5 lakhs, this 87A deduction 12,500 cannot be availed as such. And when you have below 5 lakhs total income, I can avail 12,500. Thereby, you can save your tax to be paid. 80TTA and 80TTB. This 80TTB is being introduced this year. 80TTA is a section wherein you have a maximum of 10,000 of amount of to be claimed as an interest part from an SB account for a balance in the bank and post office schemes, right? So in bank and post office, the interest is being calculated on daily basis, and this SB interest, saving bank interest, you can claim under 80TTA to an amount of 10,000, and 80TTB, which is being introduced for senior citizen alone, they can claim up to a maximum of 50,000 as such, right? So a person, a senior citizen who is claiming a deduction under 80TTB cannot claim deduction under 80TTA. And apart from senior citizens, those who are claiming under section 80TTA, for this current year, they can claim up to 40,000 interest, because up to 40,000, there is no need of TDS to be paid. And the threshold limit under 94A, which was 10,000 earlier, now it has been increased to 40,000. So 80TTA and 80TTB go hand in hand, and you should be very careful for availing the deduction under these things. 80U, it is similar to 80DD, wherein the tax deduction is allowed to tax assessee for who is having physically challenged and mentally challenged, for self, spouse, and for the dependent as such. Here the amount is 40,000 for the disability, 75,000 for 40% disability, and 1,25,000 for the severe disability as such. Standard deduction of 50,000, which is a welcome part for all the salaried people, and which has been increased from 40,000 to 50,000 this year as well. And you all can claim this 50,000 as such. Putting into a nutshell, 80C, 1.5 lakhs, 80D, max of 25 or 50, based upon the age of assessee and their parents. Section 24B, max of 22 lakhs, 87A with the revised schedule of 12,500, standard deduction of 50,000, 80E for the interest towards educational loan with no limit, 80CCD 1B maximum of 50,000, 80 section 80 double G 60,000, section 80 TTB 50,000. So put it in a nutshell, you can avail all this deduction and you can plan your tax to have a good deduction for by lowering your tax to be paid. Now going forward for the income tax slab, and this is why, because this, as I said, we have old regime and new regime. So the option 1 is the old regime, option 2 is the new regime, wherein we have a bifurcation of 2,50,000, 2,50,000 to 5, 5 to 10, and about 10, wherein in new tax, we have an additional bifurcation between 5 lakhs to 7,50,000 with a tax percentage of 10. Fine. So regarding the rebate, regarding the education cess of 4%, and regarding any other deductions to be taken up, everything are same for the old regime and the new regime. Only with the bifurcation introduced for 5 lakhs to 7,50,000, 10%, wherein we'll be having a tax benefit by paying less tax. Next option is between an individual 60 years and 80 years. For them, up to 3 lakhs nil in case of old slab. In the new slab, we have a bifurcation of 2,50,000 to 5 lakh as a 5%. So a slight bifurcation introduced the new tax regime will have a lower tax to be paid under new tax regime. We'll wait and see in the future slides how this old regime and new regime clash one and again and wish to select as such. Now, going forward for the senior citizens, super senior citizens who have been equal or above 80 years, wherein up to 5 lakhs, we have a nil rate of tax under old regime, wherein a new slab between 2,50,000 and 5 lakhs, 5% is being introduced. Here, the 3 slabs, that is 2.5 to 5%, 5 to 7.5, 10%, 7.5 to 10 lakhs, 15%. These three have been newly introduced comparative to the old regime as such. And as I said, the educational cess 12,500 rebate under 87A, and the certain exemptions and taxes are being similar to the old tax regime under the new tax regime. Now, going forward, seeing all this, all the tax slabs of bifurcation of newly introduced in the new tax regime, we all will be confused whether to pick up new or whether to pick up old tax regime for having a good tax planning as such. So going forward with that, what to do, whether new or old, I'll give some ideas to be taken up with an illustration so that you will be convinced which regime to be taken up as such. So in case of new tax regime, who can avail this? So section 115 BAC is being newly introduced, wherein individuals and HUF can claim deductions under new tax regime or in going for filing of returns with the new tax regime as such. In this new tax regime, the major thing to be noted over here is certain tax deductions and the exemptions could not be availed. Though the slabs have been reduced, and with the reduced slabs, the tax liability is also being reduced, certain tax deductions and the exemptions could not be availed under the new tax regime. So this new tax regime is an optional to the SSC to take upon, because for any schemes to be taken up, it is only for the beneficial for an assessee. So which is most beneficial, the assessee can opt, and it is been optional given by the government. Fine. So this option cannot be taken upon to the assessee when they are not been fulfilling the conditions under 115 BAC. Right. So the section 115 BAC tells about the conditions to be taken up, the exemptions and the deductions which cannot be availed under 115 BAC. So going forward for that, what are all the eligibility criteria? Fine. So assessment year 21-22, individuals and HUFs can go in for this option following: they do not have a business income, and they by calculating that they have to forego certain exemptions and deductions, that is all 80C to 80U, they cannot claim deduction except 80CC-D and 80JJ-AA. Section 24B, they cannot claim. And under section 10.5, 10.13A, 10.14, and 10AA, and professional tax under 16 or and entertainment allowance could not be claimed under the new tax regime. And 32.1, 32AD, this is all regarding the depreciation part, and we'll skip that. 35, 35 AD, 35 CCC, this is towards the donation made to the Scientific Research Association, wherein if we donate to this association under section 35, 35 AD, 35 CCC, we can claim 100% exemption for that. So that exemptions cannot be availed in new tax regime. And 57 clause 2A, wherein we are availing family pension. In that case, we can claim 1/3 of amount to be claimed under 57 clause 2A, which cannot be availed in the new tax regime. Right? So, and the set of losses, as I told you, in case of carry forward losses of house property or carry forward losses of capital gains, which can be carried forward for 8 years, cannot be availed if we go for the new tax regime as such. Now, going forward, the exemptions to be taken. So all these are exemptions have been given in the previous explanation, the exemption of house rent allowance under section 10, leave travel concession, food coupons, company lease cost, standard deductions, uniform allowance. So all these come under the head salary. Deduction come under the total gross income, that is public provident fund, equity linked savings scheme, employee provident fund, LIC, so on and so on. Fine. So now we have to see from this what are all exemption we have to forego when we go for the new tax regime under section 115 BAC. So major deduction 80 CCC, 80 CCD, 80 DD, 80 DDB, 80 EE, 80 EE, GA, and 80 IA have to be foregone. Standard deductions have to be foregone. Allowances under 1014 and house rent allowances, leave travel concession, entertainment allowances. Under 10A, exemption for SE unit, home loan interest under 24B, donation to scientific research under 35 and 35D, depreciation under 32IA, 57 clause 2AI for family pension. So all these we have to forego. And allowable deduction and exemption, number 180 CCD, employer's contribution to your pension account, conveyance allowance for the performance of official duty. You should be very careful. Conveyance allowance for the performance of official duties, deduction for 80 GG or 80 JG AA, additional employee cost, any allowance for the cost of travel, tour or transfer, transfer allowance for differently able employees, daily allowance given to employees under certain conditions based upon the negotiation between employer and employee. So only these exemptions and deductions could be claimed. So entering into these two things, the two aspects is to be seen in the new tax regime. One is the tax slabs have been increased, wherein there is a lowering of taxes, but it has been beneficial only to a person who has been within the range of rupees 50 lakhs, rupees 15 lakhs of income, and they have to forego certain exemptions and deductions as such. Right? So when you choose your tax planning in the new regime, you have been foregoing certain exemptions, and the next year when you've been taking upon that, even that year you have to forego your exemption and deduction, and that time we'll be feeling that we could have optioned it for the old regime. So this new regime is been beneficial only for the short period. In the long run, it will not be useful because the deductions amount what we have been investing will go in waste when we don't claim. So these are all the tax rates what we have seen this. Now we'll go forward for the illustration to be seen so that you will be convinced more what to choose as such. So in case of scenario 1, R is a bank employee who earns 8 lakh a year. He contributes towards EP of 25,000 and also gets an HRA of 30,000. And apart from this, he is eligible for LTA, and this year is incurred 25,000 on his traveling, and he will be claiming it under LTA. And due to his family obligation, he has not invested other than the EPF. So now we have to compute the taxes and to see which is more beneficial to him, whether the old one or the new regime as such, for having a good tax planning in order to pay a reduced tax. So the first important thing in the tax planning is the computation of gross total income. So here you can see the computation of the gross total income has been arrived with the exemption under the head salary. So here in the old regime, as I said, standard deduction, EPA, HRA, leave travel concession, everything could be availed, which has to be foregone in the new tax regime. So concluding, we have a net taxable income of 6,70,000 and 8 lakhs in the new tax regime. So having a computation of tax liability, you can see in old regime, the tax which is to be paid by R is 48,000 360 in old and 46,800 in the new. So the new tax regime is not beneficial to our having certain deductions and exemptions, right? So we have to work it out for each and every assessee to see that which is more beneficial. So under old tax regime, he is paying 48,360. Under the new tax, he is paying 46,800. So he has a benefit of rupees 1,560 to be taken upon. So based upon the calculation, depending upon individual to individual, which is more beneficial to the assessee has to be taken upon. In scenario 2, when you go upon an IT professional earns 13 lakhs a year. Being salary, he contributes towards EPF of 25,000. He is also investing in 40,000 ELSS and life insurance with a coverage of 1 crore. In case of a life insurance coverage, if you pay a premium of over and above of 20% of your coverage, your premium will be restricted to 20% of the total policy amount. He has paid a premium of 10,000. He is also eligible for claim deduction 30,000 under HRA, 20,000 under LTA, and 26,400 for the food meal to be taken up. So with this, we'll see how he's been benefiting with the new tax or old tax regime. So going for the calculation of gross total income, in case of old tax regime, his taxable income is 10 lakhs 98,600, whereas in new tax is 13 lakhs. In spite of this 13 lakhs, the tax to be paid will be only 1,43,000 with the new slabs which is being introduced in the new tax regime. So this is a good tax planning for him as he can opt for the new tax regime because he has to pay less amount compared to 1,94,999 in the old regime as such, fine. So now going forward for scenario 3, wherein major deductions and exemptions has been claimed. Here, S is a person who is an individual earning 20 lakhs annually and is availing 1.5 lakhs full under ATC towards various contribution, what we have seen in the earlier slides. And he also claims under 80D 25,000, LTA amount 25,000, NPS 30,000, and ATCCD, which is over and above of ATC. And going forward for calculation, we can have a gross total income, so net total income of 6,70,000 under old regime and new tax slab of 20 lakhs, fine. Now we'll go forward to have a calculation of taxes. Here you can see a magic to be taken upon, wherein in spite of new slab introduced of bifurcation of 5 and 10 in the new regime, the total tax paid in new regime is 3,50,000, whereas in new old is only 3,26,40. So this depends upon, in this scenario, this individual will select only the old regime because he is paying less tax under old regime. So this depends upon individual to individual, and the computation has to be taken upon individual to individual. So it's better to have a good consultant to have arriving at good tax planning for this particular year, wherein the new tax regime is being introduced. Now the confusion whether to go for old or new. So it is being taken upon that if you have been in business and profession, you cannot go under 115 BAC. And once you have opted, you are in income and profession, you cannot switch over from old to new and new to old, fine. So once you have been selected, you have to go upon the new regime. One chance is being given to come back to the old regime, because you have to be very careful, because this new regime is being newly introduced, but this exemption and deduction is being there since the act has been enacted, and we have to wait and see if you have been investing more in the exemption and deduction, and if you could not claim for this new regime tax slabs, and we'll be foregoing that exemption and deduction in the future years to come. Fine. Now going forward for ITR 1 or Sahaj, we have come to the end of the session of income tax filing. So as I said, only 5 days before this, the ITR 1 utility has been released, and still there is an errors has been popped up because more validation errors has been emerging due to non-importing of 26 AS of an individual, and mismatch of the names with the PAN database and the Aadhaar database, and mismatch of phone numbers in the Aadhaar link and the link between the PAN and the Aadhaar. So all these validation have to come across, and I think in a week's time, everything will be solved. Now, going forward for this return can be filed by an individual whose income is below 50 lakhs, because above 50 lakhs, they have to go for the other returns, ITR 2, 3, or 4, and only for the income from salary. Income from one house property, you should be very careful. If you're having more than one house property and you're having a rental income, ITR 1 cannot be filed. Interest income and family pension taxable under other sources can avail this form. And in case if you have been coming in other categories, that is, you have been invested in the shares, you have been taking up on the share trading. In that case, you have to arrive at a capital gain. Even if you have a loss, you have to disclose that. And in that case, you cannot file ITR 1. You have to go by ITR 3 only. And moreover, if you have any other income to be clubbed in of your spouse or your minor child, which is being clubbed along with your return, then also you cannot go for ITR 1 or Sahaj as such. So these are all about ITR 1. And who is not eligible? This return is not being eligible as a director of a company, because he gets a remuneration and he gets a sitting fees from a private limited company or a limited company as such, and who have been held having any unlisted equity shares. I told, when you have been investing in a shares, you cannot come for this ITR 1. You have to calculate compute income under head capital gains, and you have to go for ITR 3. And if you have any asset located outside India, has any signing authority in an account located outside India, income from any source outside India, and the new thing which is being introduced for this year is then deferred tax under ESOP, which is to be received from the employer. You cannot go in for this thing because the ESOPs have been emerging since last 5 years in all the MNC company, wherein employees is being paid as an ex gratia to feel the ownership of that company. ESOPs have been issued. And you have withdrawn cash, and the TDS is being deducted under 194E. And this is a key note to be noted, because we are all having a SB account wherein we have been withdrawing cash from the bank and depositing cash. In such a case, under 194E, banks are supposed to deduct the TDS. If the TDS is being deducted for our account, SB account, and it is being reflected in 26 AS, this return cannot be filed as such. Fine. Profits and gains, capital gains, income from more than one house property, you cannot go for ITR 1. Fine. In that case, income from other sources, winning from lottery, activities of owning and maintaining race horses, income taxable under special rates, and wherein your agriculture income is more than 5,000 and you're being apportioned in accordance with the provision of section 5A. If you are being come under this, you cannot go in for ITR 1 as such. Fine. Now, further, this return has to be filed with the following laws, deductions, and exemption to be taken forward. That is, brought forward losses if you have income from house property, and if you have income from other sources wherein double taxation relief avoidance has been taken up by you under section 90 and 91, this form cannot be taken upon, and in case of family pension also. Fine. Now, going forward, changes in ITR 1. Interesting part to be noted that amendment which has been brought for the current assessment year of 21-22, ITR 1 cannot be filed once if your SB account reflects the deduction of TDS under section 194N and your 26A also reflects 194N. Now this thing 194N newly introduced, wherein for the non-filers the cash withdrawn exceeds 20 lakhs, for the filers exceeds 1 crore, TDS is being taken upon. In that case, you have to go for ITR 2, 3 or 4 depending upon the nature of income. And this 194N is not for one account as such, for all the accounts for one bank. For example, you have an account, one account in SBI, one account in IOB, and one account in HDFC. Then the bifurcation of combination, combining the, say, all the accounts could not come. For each bank, you can avail an 20 lakhs or 1 crore according to the bifurcation given over here. Fine. Going forward, key changes for ITR 1. As I told you, the new option of new tax regime of 115 BAC is being given, wherein this can be availed only if you've been filing the tax returns as per 39(1), that is within the due date as of now, November, and we can expect the extension because now only the forms has been releasing, but still we see that all filed within the due date of 139(1). ITR 1 cannot be filed for the TDS under 94N, ESOPs, and quarterly breakup. Now, the important key point to be noted here is from this year, all the dividend income received is being taxable. The exempted part is being removed, and hence the schedule DI is being removed from the ITR 1 form. Fine. And the donation amount to be taken upon, that I told you, that is from 10,000, it is being reduced to 2,000 as such. Now, who cannot file this, we have seen already, so we'll skip off all this, as we have discussed all this in the previous slide. And going forward for the general instructions for this, my opinion is all of us are in a opinion that since it is a salary return, we can file ourselves. It's only based upon Form 16, we'll file ourselves. Yes, well and good, you can go ahead. If you have income alone from salary, and you have only certain deductions under 80C and certain exemptions under 10, which is being incorporated in Form 16, you can very well go ahead with yourselves filing the ITR forms. Otherwise, kindly take an advice of a tax consultant or a chartered accountant, because we see day in, day out, all the salary people who have been filing themselves with a small error or what, and after receiving notice under 143, they come to us for the rectification of those errors. Fine. So one thing is, you have been tensed with the mails and messages received for the error file, income tax return is being filed by yourself, and moreover the fees to be paid for the rectification is more than the fees to be paid for filing the returns as such. So my advice and my opinion is, when you have more number of deductions and we are availing more deductions, for example, you are having income from salary, and you are having income from house property, and you are having income from other sources from SB and FD and 194N, you better take an advice of a senior consultant as such. When you have been a minimum of below 5 lakhs or minimum deductions and exemption, you can go by yourself as such. So first we have to select the assessment year as such. I'll show you online. You have to download the extract zip file, which is there in www.incometax.gov.in. System requirements for that is Excel utilities. You should have macro enable MS Office version 2007, 10, 13, or Microsoft Windows 7, 8, and 10 with a net framework of 3.5 and above. So all these things, if system requirements is good in your thing, you can go ahead. Be people, we have a separate software being installed at our office, because day in, day out, we file n number of returns as such. So we take up the help of the softwares which is being in the market, and with the help of that, we file the returns and even see what are all to be taken up. So Java utilities, you should have Microsoft Windows 7, 8, 10. In case of a Linux and Mac OS 10.x with a JRE runtime, that is a Java runtime environment with a version of 8. And JRE can be downloaded from this particular website in order to have a thing as such, right? Now going forward for ITR form as such, I'll show the form. To be going for the form as such. 1 minute. Are you able to see the form, ITR form? Yes.
No, ma'am.
Form.
Ma'am, only we can view the slide.
Slides, 1 minute. Oh, I'll put stop share for the slides for time being. The screen is passed. Share screen. Now I'll take up on this. Yeah, now you're able to see.
Yes, ma'am.
Yeah, now this is the ITR1 Sahaj form which is being introduced for 2021 and 22. Here you can see a new thing which I introduced, as I told you. Are you opting for the new tax regime? This we have to click yes or no. Then only if you are being taking upon the new regime, the return will go for that template as such. So the template is this, and we have to be very careful in filling of all this thing. Each and every column is being very important, because any interchange of this column will throw up an error in filing of the return. So this is the thing. And here in part C, you can here you can see the bifurcation which is being given. As in last year, we had been given a relaxation for depositing or investing in the schemes up to 31/7 for the year 31/3/2020. So now this is being given as a bifurcation, because individual should not claim the deduction which is being taken upon in the last year and in the current year, because this 31/7/2020 is in between 1/4/2020 to 31/3/2021. So all these deductions, what all I told, is being there, and each and every column is being very important to be taken upon. Now, in case of verification, this form can be validated with other OTP or with a digital signature of your own. And other OTP you will be getting only if you have been, your Aadhaar and PAN is being linked, and your Aadhaar is being updated with the mobile number in which we want to get a OTP, right? Moreover, the name as per the Aadhaar and PAN and the ITR form should be matched. For example, the first name, last name, and the middle name should be same in the income tax return you are going to file, and should be the same in PAN, and it should be same in the Aadhaar. If there is any mismatch, the error will throw up that your name is being mismatched. Rest and all is okay, because we have been filing for all these years. So in this return itself, it is being the conditions to be have been inserted, wherein who are all eligible for filing the returns as such. Now we'll go upon for the online thing. Now I'll share my screen with the Google part as such. Oh, 1 minute, how to go for that? Yeah, now are you able to see Google in my laptop what I am sharing?
Yes, ma'am. It is
Yeah,
visible,
fine.
ma'am.
Yeah, now this is the income tax website as such, www.incometax.gov portal. This is e-filing 2, wherein a very big revamp has been undergone, and that too this year JSON utility is being introduced, and you all will be knowing if in newspapers and news also it has come up from June 1 to June 7. The entire website was being under maintenance in order to bring e-filing 2.0 as such. Right? So this is a website as such. Here we have all the thing what all you need and the services to be known and any doubts and clarifications to be known over here. Then first we have to log in. I'll log in my thing because till now we have not updated version of any of the returns, including ITR 1. Still we are waiting for the latest updation to come. So the important point to be noted is day in, day out, the updation is being coming in the validation of returns, the updation is coming in JSON validation, and the updation is being coming up in the utilities as such. So whenever you have been filing, you have to take upon the fresh utility, fresh JSON file, and the fresh template to be taken up. So I'll go with my thing. The user ID for everyone is a PAN number, and going forward with the password to be taken up. Now I have logged into my thing. Actually, for my return, it is ITR 3 because we professionals, we have to file under ITR 3. I'll show how to go about with the forms for you as such. Now we have dashboard, e-file, so many text box as over here. So as I told you, any error in the filing of return from this year, there is complete e-assessment. So unlike previous years, we cannot go to the income tax office and say that there was an error, I missed this documentation to be taken up, I missed this income to be included, I missed this deduction to be taken up in the return. Now everything is being an e-assessment. The rectification has to be done only online, and for any queries or everything is being taken up thing, that is we have the faceless assessment to be taken up from this assessment here. So I request everyone to be very careful when you go in for the filing of returns. So it up to date, we don't have offline utilities. If you click on the offline utilities, it will direct you to the login to the website directly. So e-file, in that income tax returns, in that filing income tax returns. So in view file returns, we can view the past returns which is being filed for the previous years as such. Fine. So all these years I have filed. And in case of e-verifying return, when you don't verify the return with Aadhaar OTP or digital signature, we can verify. Now the option is being given for certain days to verify even the past years. And view form 26AS, you can view your form over here as such before taking up, because you want to know the amount of TDS which is being taken upon. So that amount you can confirm while viewing the form 26AS as such, because this you have to import. Here you can select the year as such, and HTML or text or anything you can go while, and you can see what are all the deductions has been come over here. Right? So this is one part of viewing 26AS, and in ITR 1 template, you have to bring this there. There is an option of import from 26AS. In that case, you can bring this amount which is being taken upon over there. And going for download pre-filled data, when you're filing the income tax returns, you can save the data, but till now this option has not come, because even yesterday we have tried, the download file is being failed because of the not proper JSON utility is being taken up. Now select the assessment year as such. Current year is 21-22. Previous year we cannot file unless otherwise you have been given a notice wherein any income escaped in filing the erstwhile returns. You have been given notice. In that case, they will open that particular year for you. Now select the assessment year and you can go in for the continue. And here there are two options, online and offline. If you click the online, again it will go to your login only. So till now offline mode is not been given. Online, proceed. So till next week, don't try for your filing because the error is being thrown up at every stage, fine. So start new filing. And here you are an individual, HUF for others, fine. So in case of, I'll select individual, continue, and here you have a forms to be taken up, ITR 1, 2 or 4. So I take upon ITR 1. So here also you have been given a message that who are all eligible for ITR 1 as such. So if you have been come in within this that we have been discussed in the earlier slides, you can proceed with this ITR 1. Now here you can see validate your returns, breakup, pre-filled, confirm your return summary, verify and submit your return. So here in online facility, you have been given running time to complete the thing as such. Now let's get started. Here you have to give the exemption checkbox. You have to see that and you have to click. So taxable income more than the basic limit. So what is the basic limit? If you have been below 60 years and old, 2,50,000. 60 to 83 lakhs and above 85 lakhs. That is the basic limit. So taxable income above the basic limit, you go forward. And each time you have to validate. So till this I'll stop because beyond that if I go it will enter, everything will be entered in my return, then I cannot delete that. We have personal information first to be taken up. It will be an default thing. All the personal information will be of default, your address, your Aadhaar number, whether you have been linked, your email, your phone number, everything will be taken up. And if you have been filing before 139.1, that is before the due date, this checkbox will be automatically selected. If it is been belated returns 139.4 or 39.5 revised return, it will be automatically selected, right? So only the personal information you can will be default, and if you have anything to be changed, you have an edit option and you can change for updation of your mail or updation of your mobile or your address as such. And in case of employment, you can select any of these thing and you can go forward as such. And moving forward, you have over here gross total income. If you give submit over there and continue, you will be confirm. Yeah, whether 115 BAZ. So I'll give no and I'll continue. So validate return each time for your personal information is being confirmed. Then this one will be updated for you because it will be highlighted for you. Then gross total income as per form 16, whatever is being there, you can take upon in this calculation as such. And total deductions also as per form 16, what all you have, you can fill. And thereupon tax paid. In the tax paid column, you have to import the 26 AS and any advance tax you have been paid in that particular file. So I'm stopping with this because my return is ITR 4. I cannot proceed beyond this. I'll just give an idea of how to go about. Once you complete each and every checkbox, it will automatically take you to the next checkbox and see that before confirming all the details have been perfect as per the thing. You should have a homework to be taken up apart from your form 16, your personal information and other details and the deductions, to have twice or thrice check while you're feeding the thing. And don't forget to import 26 AS and the advance tax paid, and whatever the taxes are being paid in case of self-assessment tax is being paid. In that case, the challan number, date, BSR code of the bank are very much important for you to get the validation as such. Fine. So I think with this, I'll close this ITR form, because if I proceed beyond this, my form will get thing as such. Now, going forward, 1 minute, yeah. Now going forward to our PPT as such, are you able to see my PPT?
No, ma'am.
Yeah, 1 minute. Yeah. Now this is the basic thing to system requirements. This is very much essential that you should have compulsorily this system requirements in your PC or laptop. Then only you can be able to download the utilities as such, download the JSON utility, and if you work online on the ITR forms, you can go ahead as such. Fine. So with this, I conclude, and I thank each and everyone who have been patiently there for listening me, and for giving me an opportunity to share my knowledge in income tax filing and the tax planning as such. I think to some extent I have given an updates over the tax planning and ITR forms. So you can contact me at any time for any clarifications as such. And I once again thank every one of you and the management of Congo Arts and Science College and the office bearers of ICSI for giving me an opportunity as such. Thank you very much, and thanks a lot. Wish you all the best, and wish you a happy filing, and stay safe, and wish you all the best to everyone. Thank you very much. I'll stop share. Yeah.
Ma'am, thank you for your elaborate explanations about e-filing of tax returns.
Thank you.
I think people are get highly satisfied. So due to that, there is no queries on your topic, ma'am.
Yes, thank you. If they have queries, they can ask anytime. My number is 9942081168. I'll put in the chat box. So at any time they can ask for me the queries, because at this time no one will be having a thing. So you can call at me at any time. I'll be there to clarify your doubts. And my advice regarding the filing of returns, it is better you go with your tax consultant or a chartered accountant, because in nowadays it has been a bit complication of filing ourselves the tax returns. You may feel it is only a form 16 and it is an ITR 1 only, but as I showed you the columns which is being there in ITR 1, each and every column is being important by itself, because there should not be any interchange of that. Fine, thank you. Thanks a lot.
Thank you, ma'am. Thank you so much. Now let us go into the concluding session. Before that, there is an important announcement for the participants from organizing team. Dear participants, tomorrow's technical session will be start on 3 p.m. Once again, I insist, tomorrow's technical session will be start on 3 p.m. Kindly join by tomorrow 3 p.m. Thank you everyone for your presence. Made this day a memorable one. I request your cooperation would be continued to the forthcoming days also. Once again, I thank you for sparing your time and making your presence. Thank you, ma'am. Thank you all.
Yeah.
Thank you, participants.
Thank you. Thanks a lot.
Thank you, madam.
Thank you.